Equity Group's balance sheet grew by 21% to 677 billion shillings, driven by a 21% growth in net loans and a 40% growth in cash and cash equivalents. The volume of diaspora remittances grew by 28% to reach 102 billion shillings.
We continue to see that the interest income trade now is growing back to pre-interest capping rates. We can see 12%, and when you break down total interest growth, we see 11%, suggesting that treasury and loan interest component, and essentially with 32% of the interest coming from the Treasury Department.
The bank says the lifting of interest rates cap will boost its loan book, though it had adjusted its operations to the interest rates cap era. Equity Group Chief James Mwangi has said, despite slow growth in South Sudan and Uganda, the bank is seeing growth as its subsidiaries jumped 26% compared to Kenya, which recorded a 21% growth. The bank further says its internet and mobile banking is growing faster than the conventional banking model, but it doesn't have any plans to close its brick-and-mortar business.
Mobile is now marginalizing all the other channels. So digitization has worked, and the next thing we'll see, the next big thing we'll see is internet banking now taking over because the corporates have also adopted it. They no longer want to come to the bank. They also want to do everything they do on the internet. And we can see the only remaining thing is high-value transactions.
However, the bank is still struggling with a high rate of non-performing loans, which now stands at 8.3% of its loan book, almost 5% above the market average. The bank is blaming these on difficult business environment, especially in the small and medium enterprises segment.